Hello everyone, it's your options guy. Welcome back to another video. So in today's video, we're going to talk about the 3 stocks that I think you should be watching out for next week. And it's good because these 3 stocks are actually part of ARK's ETF. So ARK is, I want to say heavily invested, but they are definitely invested in these 3 stocks. And I like having ARK invested in the stocks that I'm playing with. It just makes me feel safer. So let's get into the stocks. Alright, so the first stock, of course, is Palantir, my favorite stock, the one that I have all my money in right now. All my portfolio is in Palantir. I've been selling calls and puts lately, just been going kind of in and out, but over the long term, I'm bullish on it, and I think it's just a good stock to be playing in, especially right now as we're getting closer to earnings. So my price target around earnings is 50, and that's because a couple days ago we reached 44, 45, and then it came back down. And I thought it was good that it came back down because it was shooting up too fast. So with that being said, with the 40 to 45 jump, that kind of tells me that it has good enough volume, enough demand for it to push through that 44, 45 come around earnings. Because usually with earnings, especially like either 2 weeks or a week before the earnings, that's when the stock actually starts getting like kind of crazy, starts shooting up, and then everyone has like a lot of eyes looking at that stock. So price target is 50, and I think it's good to be playing it right now. If you're not in it right now, you can sell puts. So if you take a quick look at Palantir for next week, if you go to trade options February 5th, which is basically the next expiration, if you sell puts to strike right underneath the current price, you can make around $218 just by selling one. Now, if you want to be selling calls, which means you already have shares, or if you're planning to buy shares and then just sell calls and make that premium, then I would do the same thing. Instead of selling puts, you sell calls, you hit the price above the current strike price, so that'd be your strike price, and you make around $200 as well. So for next week, if you do either one of these plays, you should be making around $200 for next week just by selling puts or selling calls. Okay, so the second stock that we're going to talk about is Workhorse. So Workhorse has been it's been an interesting stock because ARK has been investing in it for like pretty early, I would say, and during its like coming up time. So Workhorse it's been getting hyped because of like the potential contracts with the USPS and the government and all that stuff. However, it kind of like has been going up and down because we're not too sure if they're gonna get it or they are. We don't know. It's been pushed back. But either way, the Biden administration has been pushing for more EV stuff and EV kind of fleet. So Workhorse is kind of up there because Workhorse is a US company, so that like gives it that I guess prestigious type of EV versus some other ones where they're not US type of company. So not only that, ARK is investing in it for a reason. So I think Workhorse is a good one to watch out for. It was one of the only stocks that was green this past Friday, and Friday was like a bloody day, bloody red day for a majority of the big stocks. So however, Workhorse was up. So Workhorse, I feel like, has a good support around 32, 33, and right now it has like resistance around 40. However, Workhorse is also approaching its earnings, so that earnings hype might be a good catalyst to start playing Workhorse. So again, Workhorse, if you want to sell puts, you go to trade options, sell put February 5th expiration. Probably a good one to get in is the price. Same thing like Palantir, price right underneath, and then you can make around $300. So Workhorse, you get more premium because it has higher IV. Even though Workhorse and Palantir, they're almost the same strike right now. They're almost the same stock price right now. However, because Workhorse has higher IV, because there's more demand for the options and stuff, that's why you get more money by selling these options. And same thing, if you want to sell calls, you get almost around the same price by selling one contract. So that's Workhorse. Oh, forgot to mention that my price target for Workhorse is also around 50 because of what I saw this past week with it jumping to 40, and it's barely starting to break out right now, and earnings is coming up. So 50 is my price target. All right, and lastly, let's talk about Tesla. So Tesla is, I would basically say, like the god of EV stocks, and it's definitely had like the best type of like, well, probably not the best, but one of the best returns of last year, and I think it's just gonna keep going. It's definitely up there now that it's in the S&P. It is considered a big player and a real player. Before, a lot of Wall Street was like, no, Tesla's bad, blah blah blah. But I think Tesla, and I always thought Tesla was good, and I actually made almost most of my money with Tesla before I started going into Palantir. So the reason why I'm bringing up Tesla is because Tesla on Friday had a really like huge dip after the earnings play. So probably a good time to get in right now if you're not already in Tesla. I wouldn't recommend doing the options, selling options type style as Palantir and Workhorse, because one, you need a lot of money to be selling options with Tesla, and a lot more than Palantir or Workhorse. And two, you probably don't want to give up your Tesla shares. So not only that, I guess number three is because the Tesla IV is not as hot as Palantir and Workhorse. So with almost the same amount of capital with Palantir, you could probably be making way more, double the money just by selling options than with Tesla. So I think Tesla's a good play for long-term wise. Probably a good time to get in right now with the dip. However, the dip kind of just started. Usually when dips or like bull trends start, it usually lasts a couple days, maybe 3 days. I think 3 days is like the general rule of thumb. So you probably want to get in now, not fully in, and then if you see the next day going red again, put a little bit more money in, a little bit more money on the third day if it keeps dipping. But probably after the third day, it definitely might start coming back up. So just follow the 3-day rule if you want to play it safe. Other than that, I hope you like this video. I hope you liked the 3 recommendations, which was Palantir, Workhorse, and Tesla. Definitely watch out for those. Now for bonus stocks that I'm not talking about, watch out for Mata and Riot. Those are the ones that follow the crypto type of trend. So just keep an eye out for those, because they did take kind of a downbeat like probably last week from before, where they were just skyrocketing like day after day. So that may happen again. So just keep an eye on those if you're in that crypto type of style. Other than that, I hope you liked the video. Please hit that like button and subscribe if you haven't already done so. I'll see you guys in the next video.